One thing that's really important is, well, fintech has arrived in China on a massive extent, I think even more so than the West, to be frank. The likes of Alibaba, Alipay, these payment systems, and actually, if you look at Tencent's system, WeChat, if you have these red packets on WeChat, for example, you can, just via Tencent do your wealth management products via there. So the arrival of fintech is also challenging regulatory conditions in China about how, with a very retail-based kind of domestic banking system, you do have to cater for those needs. But rather than accessing credit or accessing financing, what they need is a management of wealth. This, I guess, is more hand in hand with China's current economic development point, in that it's very much high savings, low borrowing type of, particularly if you look at the ordinary working class, middle income level of households. That said, I think what's really important is, again, is showing the immaturity of the market, is that because of a lack of investable asset classes, because of the immaturity of, say, a private pension fund, insurance fund, what you get in China is that it's either the stock market or indeed real estate sector that is still taking the brunt of most of those risks. Because of the implicit guarantees in place in the financial sector, everything is interlinked, whether it's banks, shadow banking, real estate sector, local governments, everything is interlinked. So I think in China is also, again, very, very different to look at China in a very different context. One last thing I wanted to mention is also when we talk about the access to financing. In China, it's a very tiered system of financing. SOEs, state-owned enterprises, will always rely on state banks in particular for their credit because they have access to those and because of the, the regulatory requirements. But small, medium enterprises, and this is actually a policy focus from a macro perspective in China, there's lack of access to credit. And the only way to do that is to encourage, smaller banks and also larger banks to lower the cost of borrowing funding for these SMEs. At the moment, it's a real battle for regulators and particularly policymakers to ensure that. So I think it's, again, it's about how, the availability of credit is being segmented in China's economy, and to encourage certain types of credit to flow to the real economy. At the moment, the linkages in place are not allowing the majority of credit being flowing into these SMEs.